What are the key levels to watch out for global markets? Darryl Guppy joins in now to tell us how he's mapping the charts globally. Darryl, hi, good afternoon. It's been good days for global markets, including markets like our own. Do you think this bullish trend will continue globally?
And the bullish trend in the Nifty is likely to continue. We can see a short-term breakout rather than a long-term trend change. At this stage, we've broken out above a downsloping trading channel, and that breakout actually took place about 2 weeks ago. So we've got a continuation of that rally. How high is it likely to go? We're probably looking at around the 8850, 8900 level for a continuation of this rally at this stage, but it's not a trend change.
Okay, Darryl, do you have any time frame for this 8800 to 8900 move on the Nifty?
The way that things have moved in the past, we would suggest that's probably about 3 to 4 weeks away at this stage. So what we're doing is we're trading this momentum breakout, but we're not trading it as a change in the direction of the trend.
I wanted to ask you about that. Why would you say that the trend has not changed? I mean, the market has sort of climbed the wall of worries globally and gotten back to this 8600 level. Don't you think that is reason enough for this bullish trend to continue?
It's not reason enough in itself. We have a reasonable level of resistance at around 8,600, so a break above 8,600 is bullish, but it's again limited by fairly strong resistance around the 8,900 level. So we can see a continuation from 8,600 to 8,900, but we have to be able to break above this current resistance level before we can say a new trend is in place. We think it's more likely to retreat from that resistance level, come back and retest the upper edge of that trend channel around the 8,300 level, and then rebound and continue.
Darryl, for a lot of Indian market participants, the move in China has been important because there's been a bit of an inverse correlation between Shanghai market and Indian market. How are you approaching the Shanghai market now?
The Shanghai market, the key factor of the Shanghai market is that we have seen, first of all, the fall has paused around 3,400. We've seen a very large increase in foreign investment coming into China as it's rebounded from that 3,400 level. What do we expect to see? We expect to see consolidation between 3,400 and 3,800. Not any V-shaped reversals here. It's more likely to be an L-shaped recovery. Correlation between Indian market and Shanghai market, it's more coincidental than correlation, we would say, at this stage.
Okay. You were telling us about the 8850 to 8900 levels on the Nifty that we could see soon. What are you watching out for on the Sensex? I mean, as we speak, the Sensex has scaled above 28,400. Would you have any levels to watch there?
We're looking for the same sort of behaviour. Now, I would be using the Nifty as a leading indicator of what's happening with the Sensex. Nifty is a little bit more sensitive than the Sensex, so when the Nifty starts to sell off, that's when I'm going to be closing any Sensex positions as well. So I'm using the Nifty as a leadership role in that sense as to what's likely to happen and how the trend and trend behaviour is likely to unfold.
Okay. Darryl, a word on two other important global parameters. One is the dollar index, and the other is Brent crude, because again we track that data quite closely.
Okay, well, looking at dollar index, the key factor of the dollar index is the development of an equilateral triangle, and that's generally a pattern of indecision. If we're looking at an upside breakout, then our upside target on dollar on DXY is about 101, but a downside breakout from that gives us a downside target of around 90. At this point in time, it doesn't really give us a clear idea of where that direction of breakout is likely to take place. So we're at a point of indecision.
All right, just one final word then on the Dow and the S&P. We have seen, some significant levels getting reclaimed on the Dow and the S&P as well. It's been 4 or 5 days of a good run there. How are you looking at these two indices on the chart?
The key factor with the Dow is that we've had a minor pullback. Now, the Dow can be analysed using a series of upsloping trend channels, and the trend line that's around 17,500 is the upper level of one of those trend channels. So the pullback to 17,500 thereabouts is perfectly consistent with the continuation of the long-term uptrend. So what we're looking for is a rebound from these levels, probably moving up towards 18,500 as an upside target, because that's the upper level of that trading channel. This is a strong continuation market. There's no indication of any end of trend behaviour on either the Dow and the S&P. An end of trend behaviour on the Dow looks like a rounding top or a head and shoulder pattern. We don't see any of these patterns developing, So these pullbacks are a buying opportunity for a trend continuation.
All right, Darryl, we leave it at that. Thank you for joining us and giving us your view. So that's the technical expert saying that the Dow could head to about 18,500 and the Nifty is on its way to get to this 8,850 to 8,900 levels. So the bullish trend